complain. Okay. Well, I guess people are dialing in now, so maybe we just wait on mute till everyone gets in. No problem. Sounds good. Hi, everyone. Good evening. Hi. So we're just giving it 2 or 3 minutes because everyone is just dialing in right now, but we're very, very excited to have all of you here. Hello. I mean, it's 6:02 now, and it's 6:02 now. We had a large number of people sign up, so we expect to be at capacity. So I'll give it just 3 minutes till 6:05, and we'll start. Rory, does that sound good?
That's fine with me.
All right, perfect. Let's go 3 minutes. I see someone saying we could use some music as we wait. Unfortunately, it's already 6:05. So currently we're probably going to get started. But so again, hello everyone, good evening. Thank you so much for joining our first Under the Bamboo Tree event, which is essentially what we're calling what were supposed to be offline activities, although due to the coronavirus, everything is now online, so we're all spending a lot of time on Zoom. We have Rory, who is going to introduce himself. He's the head analyst at MyWallSt, which is, one of our partners at Bamboo. And if you've seen, pretty interesting details about the stocks on the stock page, odds are it probably came from Rory or someone else on his team. And, I'm going to let him introduce himself and tell you why you really, really want to take his advice today.
Thank you, Yama. My name's Rory Carron. I'm the head analyst of MyWallSt. I've been doing that job for about 6 years. If you've read any of the stock details, you're right, it probably was written by me, unless you saw any spelling mistakes, in which case it was written by one of the people who works below me. I've been analyzing stocks for MyWallSt for over 6 years. I run the main MyWallSt product with our CEO and co-founder, Emmett Savage. And I have my own portfolio called the Stock of the Month Pick, in which we do a deep dive into one of the stocks in our app once a month. And so far that portfolio has performed sixfold what the market has. So yeah, that's, I suppose, why I've been asked to come here to talk to you.
Yeah, so if you didn't get that, Rory's portfolio is doing 6x better than the entire stock market. So he's at very least 6 times as good as the stock market. So we'll just get started. I think the key reason most people are here is because, we all want insights into how we should be thinking about trading, and more importantly, how we should be thinking about investing going forward, especially with all the uncertainty about the coronavirus. And I'll play around with the questions. We sent you a couple of thoughts that we'd gotten from people. But I think to start, the key thing on everyone's mind is, how would you feel about the market right now? We've seen stocks move to record high, bounce back, in record time from their March lows. And how do you think we should all be thinking about investing right now? Should we be waiting? We say don't time the market, but should we be waiting to see what happens if there's a second wave? Or would you tell us to go ahead and buy whatever we want at these, these prices?
So the market has rebounded quite rapidly following the outbreak of the coronavirus. I think whenever you're talking about the coronavirus today, we do need to acknowledge that we do not know what stage we're at in this crisis. It may seem like it was forever ago, but really the first cases were only detected about 6 months ago. And America only really started reacting about 3 months ago. So, as we're seeing an easing to lockdown measures at the moment, particularly in the United States, but we don't know yet whether this is the beginning of the end or whether it's the end of the beginning. There's doctors who've come out and said that this will not be over until there's a vaccine available. The vaccine may not be developed until at least sometime next year, and even then, it will be the fastest vaccine that's ever been developed. I spoke to a friend who has a PhD in communicable diseases who told me she doesn't believe there will ever be a vaccine because coronaviruses are very tricky, they mutate very quickly, and it takes an awful long time and an awful lot of research to get a proper vaccine working. So, like I said, this is very early. We do not know what the long-term impact is going to be. We still know so little. We don't even know yet if having coronavirus once means you won't have coronavirus again. If coronavirus behaves similar to SARS, you'll get it and you'll have immunity for about 2 years. That's not going to make a lot of people very comfortable if a second outbreak occurs within the next year or year and a half. So in terms of investing, the answer is we don't know. We don't know whether it's a good time to invest right now. And therefore, my best advice is not to worry about it. No one is going to be able to give you any solid advice. Anyone who claims to know what's going to happen is lying. So it's better to invest what you can when you can. And if you were able to invest back in March when stocks were plummeting, 20, 30%, that's great. If you didn't, you can still invest today and, keep investing over month after month. Things will average out. When the stock market goes up, you'll buy a little less. When the stock market goes down, you'll buy a little more. And over the years, you'll kind of balance everything out.
Okay. And what are some of the industries you think, are done, like that the coronavirus has done, should we say, near irreversible damage to, or, you know, and when I say industries, happy for you to tell us some companies that you wouldn't buy right now, considering ever.
Yeah, I think in terms of industries, I think it's very hard to actually destroy an industry, to totally destroy an industry. When we think about industries, you know, we typically think about the companies within that industry. So if you're talking about the automotive industry, you think about Ford and you think about General Motors and you maybe think about Tesla. But beneath that, one layer below that is all the people who work within that industry. And those people have usually been working in there possibly their entire lives. They developed a huge amount of skills, creativity, and quite often what you'll see is that a big event will possibly shake an industry about a bit, and that often kind of the weaker names within that industry will fold or go bust. Whereas the better run businesses, the strong businesses in that industry will typically adapt and pivot and survive, and sometimes even thrive. You know, and a good example would be the newspaper business, which, you know, when the internet came out, they were pretty much destroyed. You have the New York Times, who used to sell a newspaper for $2 to cover their costs of printing, but most of their money came from advertising. Then suddenly all that information was on the internet for free, and they thought, okay, well, that's fine. We won't charge the $2, but we'll still get to advertise. Then suddenly Google comes along and says, actually, no, you're going to have to advertise through us. And if you refuse to do that, we will make it so that people cannot find your content. So an awful lot of newspaper businesses died because of the emergence of the internet, but the good ones survived. The New York Times took an awful long time to figure it out, but they built a really good subscription model, and they have a very differentiated product. And the stock was trading somewhere around $4 back in 2008. It's now at $42. So, and you can see this across multiple industries. You can look at the music industry, the film industry. Both of those are threatened by online piracy. Now we have companies like Netflix and Spotify. And another thing about America as well, particularly in America, is what's unique about America is they pretty much legalized bribing in terms of governorship. So, you know, pretty much every business has a lobbyist who pays hundreds of millions of dollars to their congressman, to their senator, to the president. So when the industry goes into trouble, they typically get some form of bailout. So, I mean, in 1952, Reader's Digest basically told the entire world that cigarettes will kill you. You would think that would be devastating for the cigarette industry, but we have the three biggest tobacco companies are now worth $200 billion, 60, 70 years later. So industries don't die very easily. I think if you're looking at the coronavirus in particular, you can see some industries that are going to be really badly hurt. Travel in particular is going to be really badly hurt. The restaurant industry is going to be really badly hurt for quite a long time. And then, you know, there's other things like cruise lines is an industry where they were already a bit in trouble. They had a very aging customer base. They weren't really appealing to young people anyway. And they were very highly leveraged. They take on a huge amount of debt to buy up those boats and to create those experiences. And I think I read somewhere that during this lockdown, it's costing them $1 billion a month just to keep the company afloat. So they were already highly leveraged. Now they're losing $1 billion a month. I don't think they'll die, but I think only sorry, go ahead there.
No, I mean, I was just going to bring up, you know, since you mentioned cruise lines, I was going to bring that up. But then we've also seen that, you know, stocks like Carnival, Norwegian Cruise Lines have been doing very, very well on, you know, any little news about a potential vaccine. We saw Moderna announce, you know, maybe not. We still don't know what the truth behind their vaccine. And, you know, cruise lines were going up. So would you say those are good buys? So if let's focus on cruise lines for a second. Would you buy a cruise line, for example?
No, I wouldn't. I wouldn't have bought a cruise line before this crisis, and I certainly wouldn't buy one now. That's not to say that they might not be good investments. That's not my investing style. I like to invest in businesses that are thriving, that are delivering quality products to their customers, and that people love to experience. Cruise lines were not that. You know, they had a history of mishaps. There was horror stories of people being trapped on cruise lines with overflowing toilets for weeks. And now they have coronavirus issues to deal with. So I wouldn't have invested in cruise lines beforehand. If you want to invest in distressed industries, that's fine. But you have to remember that what you're buying is a depreciating asset, and it's time limited. It's going to need to turn around pretty quickly.
Yeah. And you mentioned travel and restaurants. So I guess I should be asking, what travel stocks would you buy right now? Maybe sell us one or two. And what restaurant stocks would you buy right now? The people want to know.
The people, they always want to know the individual stocks, don't they? Well, I think,
Yeah.
I mean, with travel is a very big industry, and within travel, you have lots of different types of companies. Again, similar to cruises, I wouldn't have bought airlines before this crisis. I don't like to invest in companies that treat their customers terribly. So I still wouldn't buy any airline stocks now. I think the hotel industry is in quite a lot of trouble as well. They were already being hurt by the likes of Airbnb, and consumers were looking for a more personalized experience. So, and then now their big cash cow was always business travelers, which it looks like it's going to take a long time for those to come back. If I was to invest in a travel industry, I would lean towards an aggregator, someone who wins regardless of the companies underneath them. Someone like Ctrip, which is now called Trip.com in China, I think was very badly punished when the coronavirus first broke out. China has sorted things out much faster than anyone could possibly believe. I think they were already overvalued before the coronavirus thing happened, and I think they're probably a decent investment at these levels. Huazhu Hotel Group is another one, which is founded.
Sorry, which one? I missed that.
Huazhu Hotel Group. It used to be called China Lodgings Group. Its ticker is HTHT.
Oh, yeah.
So they're another interesting company that was founded, had the same founder as
Yeah.
Ctrip actually. So they would be two travel stocks that I'd be quite interested in.
Okay.
In terms of restaurant stocks, you know, certain restaurants have actually benefited from this. Certain restaurants have moved quite nimbly to go into things like delivery and collection. I'm not a particular fan of the restaurant industry at the moment as a whole, because I think it's overcrowded. There's far too many restaurants in America, which is the main market. But I think companies like Chipotle are quite strong. They've been orchestrating quite a strong turnaround. And then there's a smaller known Mexican chain called Chuy's, which hasn't been doing so well recently, but I still think it's a great brand, and I would possibly invest in that if I was investing in a restaurant stock.
That's Chewy's, right? Okay, yeah.
Yeah.
Okay, that's interesting. Okay, and for a lot of us, you know, for a lot of investors, at least here, we're only just getting access to international markets. So the stock market crash, you know, and this experience is, you know, our first real experience. Yeah, it was our first real experience of a bear market. So for context, for example, the Nigerian Stock Exchange, which is where a lot of us, quote unquote, play, has a limit. So a stock can't go up by more than 10% in a day or down by less than 10%, by more than 10% in a day. So it means your maximum daily gain or loss is 10%, you know? So, I mean, and, you know, for a lot of people, you know, investing in the US, we're seeing 20%, 30% one day, and same thing, drops going 20, 30 in one day. So how would you advise, or what are some of the biggest lessons you hope people have continued to learn from this bear market?
Well, I didn't know that about the Nigerian Stock Exchange. That's an interesting system. My worry with that would be if I saw my stock go down 2%, I would instantly sell, because I don't want to be the last person holding it at 10%.
Exactly.
But yeah, in terms of this crash, you know, one of the positives from it was that it's a very short-lived crash. You know, it's and we don't know if it's over yet, so perhaps a little immature to talk about it right now, but I think one of the most important lessons, possibly the most important lesson any investor can learn, is their own temperament. And the only way you learn your own temperament is by experiencing massive drops. Learning how much tolerance you have in terms of risk is so important in ensuring that you practice good investing behavior. And like I said, the only way you will ever experience that by going through it. I speak to so many young investors all the time who load up on very risky investments, things like Bitcoin, or penny stocks, and they think they can handle the volatility. When they see their investments drop 50% in a day, they realize they can't handle the volatility. They panic, they sell the stocks, and they lock in a loss. And I also get an awful lot of investors, especially young ones, thinking they can time the market, and they say things like, well, why would I invest now when the market's at an all-time high? Why wouldn't I wait until the market drops and then I'll invest? And that assumes several things. That assumes that you are going to have the courage to invest when everyone else is panicking. which might not always be the case, especially if the economy is in trouble and you've just lost your job or your job's in trouble. You will probably not want to invest at that point. And it also assumes that you know when the market's going to rebound. You know, if the stock market falls 20%, how sure are you that it's not going to fall another 20%? So that's, you know, I've had people say to me, why would I invest now in an all-time high back 6 years ago? And they waited 6 years during what was the greatest bull run in history and missed out on, you know, 60-70% gains in the S&P 500. And now the stock market dropped 20%, and that's what they were waiting for. They've already missed the boat. They've lost out on all the big gains. So yeah, I think, I mean, the general lesson is that stock crashes happen. Living through them is an important part of being an investor because you get used to them a bit more. You don't fear them as much. And you realize that, you know, you can still invest through them and you can still make money through them. You just need to be a bit more patient.
Yeah, I mean, I think that's true because what I actually learned about my temperament in this stock market crash is usually the opposite, because people talk about what is your risk tolerance. And I realized my risk tolerance is very high. I mean, I was down 30-20% with the crash. I was, you know, but what I realized was when it started going back up, I was very, so I have my investment thesis. I invest on 1 day every month in, you know, a certain portfolio stuff. And it was waiting while I was watching the market go back up. That was hard for me. I kept thinking, I'm missing out on this. This is doing 10% a day, and you know, and it's, I guess, it's that feeling of trying to time the market, like you probably, you know, that you mentioned. But you know, that was very interesting for me. Another thing, you know, some people have asked is, are there any significant changes you think, you know, from any significant changes you think has been made in how we should think about buy and sell decisions? Or generally, how would you advise us think about buy and sell decisions? Because we usually preach long-term investing, buy and hold, don't sell because it's gone down 10-20% if it's a good company. But, you know, do you have any tips for when you should buy and when you should sell?
No, is the short answer. There's no singular event that will ever change the fundamentals of good investing behavior. And what you said yourself there is exactly right. You should be investing once a month on a specific day, and no event should change that. A strategy you could have with something like a crash is to always have a certain amount of cash spare that's not part of your monthly investment for an event like a crash. So if you have, you know, 5% of your asset in cash that's just there in case the stock market crashes one day and you want to buy right away, that's not part of your monthly investment. So, you know, the basic rule is that you should only buy companies that you love and believe in, and that you should only sell them. You should buy them with the intention of holding for 10 years. And when it comes to selling a stock, you should pretty much ignore the stock price. You should only sell a business if you believe it's fundamentally broken, or if you believe there's a better opportunity out there. And a good practice, I think, is to start an investing journal, which is simply to get a notepad of some form and write down, before you invest in a stock, to write down the reasons why you like the stock, the reasons why you believe it's going to be a winner for you over the course of 5 to 10 years. And if you ever think that you're going to sell that stock, you should go back and read why you liked it in the first place. If that hasn't changed, then you shouldn't be selling the stock, regardless of what's happened with the stock price. If you have lost faith in the company, then you should write that down too. You should write a new entry saying why you believe it's a bad investment right now. And then you should wait. You should wait at least 2 or 3 days before you actually make the sell decision. And that'll ensure that you don't act emotionally, that you're not reacting to something that's happened. You're not reacting to a news story and you're letting your emotions overtake the rational side of your brain. There's very few exceptions to that rule. The only one would be if you were to encounter a company that it had come out that they were fraudulent, in which case you should just sell the stock right away.
Okay, that's very interesting. And I guess the next question is probably one you were expecting, because you've heard all the time. What stocks right now, if you had to pick, let's say, you know, any number, as many as you're willing to tell us, what stocks do you think are must-haves right now? So if I was going to invest just after, as soon as we got off this phone, what stocks would you say I should buy? Tell us 3, you can tell us 5, you can tell us as many as you want.
You're trying to trick me into doing something I don't like doing. Yeah, I don't. Okay, so I don't really believe in must-have stocks. In fact, I actually never give individual investing advice to anyone, not even my girlfriend, not even my close friends. But there's a very good reason why I do that. It's because what I always suggest to people is to either I'll suggest a few companies that they should look at themselves, or I should ask them to tell me a couple of companies that they're interested in. And the reason I do that is because it'll force them to research the businesses themselves and to make a decision. Or if they have a company that they're already looking to invest in, what I'll do is I'll get them to pitch the business to me. And that means that they actually know what they're investing in. And then I can advise them if perhaps they've missed something or perhaps they've overlooked something in their analysis. And
Yeah.
I know that's not what you want to hear, but the reason I do this is because
I do agree with that, actually.
Yeah, the reason I do this is because I firmly believe that you cannot invest in a business unless you know it and you love it and you understand how it works. And the reason for that is that, you know, some days your stocks are going to go up and some days they're going to go down and some days they're going to go up a lot and some days they're going to go down a lot. And there's going to be days where they go down again and again and again and again and again. And if you do not understand that business, if you don't know what's going on with that business, you are going to sell the stock and you're going to lock in a loss. Even though you don't know what's going on, you're only reacting because you're afraid because you don't know something. And if you believe in the business and you see the stock going down, you'll be able to understand why, and you'll be able to make a rational decision about whether you need to sell that stock. And if you understand the business, you might even decide you're going to buy more of that stock. You might decide you're not going to sell it. So if you understand the business, you can understand why the stock's moving and make an informed decision. And that is really the most important thing. That is where so many investors fall down, is that they will listen to a guy they've never met on a webinar say a couple of names of companies, and they will go out and they will buy those companies and they will never understand what they're investing in. And as soon as the stocks go down, which they will, because all stocks go down at some point, they'll sell them and they'll lose money. So, I mean, what I can do for you is I can tell you that there are, I think, a couple of must-have industries that you should be investing in. I definitely think, you know, any investor at the moment who hasn't got some exposure to software as a services or cloud-based applications or e-commerce or over-the-top streaming, I think those are 4 industries that everyone should have some form of exposure to in the portfolios, because they are all long-term global.
So you said,
trends.
Sorry to just because you said software as a service, and you said e-commerce, definitely agree.
Yeah, cloud-based software applications. So companies, so examples of that.
Yeah, can you give us examples? Because I think some people might not know what, like, you know, so like where we should start, not in terms of what we should buy, but where we should start. So I know for e-commerce, the obvious ones are Amazon. If you're really into supporting, you know, Africa, Jumia, there's, I mean, Walmart randomly has a huge e-commerce, and I did not see that coming. So there's
I mean, there's plenty of e-commerce plays out there. You know, you could consider PayPal or MasterCard, both e-commerce plays as well, because they make money when people spend money, and you have to go through one of their networks in order to spend money online. There's a company called Shopify, which is our biggest winner at MyWallSt. That's an e-commerce play. Etsy is a very interesting company that sells kind of handmade goods rather than factory produced goods. And a few years ago, Amazon actually tried to destroy Etsy by creating their own version of Etsy, and it totally failed. So any company that's able to beat down Amazon, to me, is usually a good investment. The other industries I mentioned were software as a service. That's, you know, I said software as a service and cloud-based enterprise applications. They're kind of almost very similar. You know, these are companies that are able to deliver to businesses in particular applications that 10 years ago would have been totally unavailable to them. So when I think of something like Zoom, for example, is a very good example of a cloud-based application that most businesses wouldn't have been able to afford 20 years ago. But now everyone, including my mother, has a Zoom account because it's so simple and so fast and so easy. Slack is another very interesting business that has completely reinvented how businesses communicate with each other. And it's all done, you know, if you want to get a Slack account, you go onto slack.com, you download the application, and you have an account within 2 minutes. That would have been thought of as impossible before cloud computing, before we were able to deliver this kind of application software to people in such an efficient way. there's loads of examples. Workflow, Workday, ServiceNow. You know, I could go on and on. If you want to see all the lists, you can open our app. We'll have plenty of businesses there.
Say that on the MyWallSt app, they have tons of businesses, tons of industries, and you can definitely look at that. I know one company that was looking at I'd say they did really badly.
Sorry, Amo, you're breaking up there, but I mean, I can't hear you.
Oh wow, can you hear me now? Is my internet bad?
It's just a little. It's breaking up a little bit. I think you're a little bit better now.
Okay, just let me know if you can't hear me. Yeah, I was just saying that yes, because I looked at Atlassian. Is that how to pronounce it?
Atlassian?
Yeah, Atlassian. There we go. Because you guys did my research and it was good. Sorry, hold on. Am I breaking up? Because I'm getting.
You're a little breaking up. I can still make out most of what you're saying.
Okay, give me one more. Okay, if it gets too bad, is it better now? Let me just.
Still pretty much the same. Sorry.
Oh, I'm so sorry, guys.
If you want to maybe turn off your audio and turn it back on, maybe that'll help things.
Yeah, I might. Okay, is it just is this? I just tried to check. Is it back up now? It should be. Let me switch. Well, I know what I'll switch. Oh, okay. Is this working now? I just tried to like toggle my internet a bit. I should be back up.
It's a little bit better. Let's try it.
Okay. Yeah, that's lovely. Okay. Okay, sorry guys. Internet is messing up. Perfect. If it gets really bad, just let me know and I'll probably log out and log back in to check if that helps.
Oh, that sounds much better now. Whatever you've done.
Okay. Yeah, I swapped internet. So yeah, sorry guys. I'm in Nigerian internet. We're working on it. Yeah. Sorry, I've now messed up the flow of the conversation. You were saying something about you were talking about industries, and I know you mentioned cloud-based software, e-commerce as must-have industries, and you mentioned when you think e-commerce, don't just think buying online, also think of stuff that enables e-commerce, like payments, so PayPal, MasterCard. And on that note, actually, a very interesting debate I had recently. Would you do MasterCard or Visa, and why?
So MasterCard is one of my biggest holdings, and the reason I always go with MasterCard is because I always believe they're the more innovative of the two businesses. I think it's a company culture that's driven by innovation. Now, I know Visa has tried to adjust to that over the last few years. They bought a very interesting business called Plaid just a few months ago. But to be honest, if you invest in either of those businesses or both businesses, I think they are great long-term investments. There's very little difference between them. The reason I go with MasterCard is I always just felt they were a bit more innovative and a bit more driven by innovation.
Makes sense, yeah. I mean, yeah, Square is also good, which is very interesting and doing a whole bunch of stuff. So Mark Lazary has said that the stock market isn't pricing in a recession that will probably last for a while. Do you agree with this, should we say, thinking? And how do you feel about even considering these kind of comments, especially from, hedge fund, big investors?
So, I mean, I'm not an economist, although as far as I know, neither is Mark Lazary. But look, he's a prominent investor who's made an awful lot of money over the years, so his opinion is worth listening to. Goldman Sachs did some research into this, which showed that event-driven recessions typically last about 18 months. That's the average. And I think an awful lot of people just get a bit scared by the word recession, which is natural. particularly because the last one we went through was very severe, very brutal, very painful, and very long lasting. And it's, for an awful lot of younger investors, it's probably the first one they've ever experienced. So when the first recession you experience is that bad, you're going to always be spooked by recessions. But recessions are a perfectly natural part of the business cycle. They're typically much milder than the one we previously experienced. And in terms of the stock market usually doesn't even notice when a recession's happening. The stock market is usually back up by the time a recession actually kicks off, or by the time the recession's actually being measured by the economists who check the GDP numbers. And they happen on average pretty much every 5 to 10 years. But again, that doesn't mean, so I mean, we're overdue one, but that's not how they work either. Sometimes it takes a long time for them to come. Sometimes they come in quick succession. But what I would say to investors is, even in a recession, there will be investing opportunities. And if you're a younger investor, if you are, you know, in your 20s, even in your 30s or 40s, and you've got a couple of years left of potential earnings, you should be looking for recessions. Recessions are good for you. They drive down the prices of companies that you want to own. So why would you be worried about something that's going to put a stock that you want to own down 50%? It's like a sale. You should be delighted when you see one happen.
Yeah, I mean, I think that's a very, very good point, especially the fact that the stock market is usually the start of, you know, the crash is usually the beginning of the recession rather than the end. I think that's, you know, a very good point to make. And like you've mentioned, there have been a lot of opportunities. Those who invested in March before, I mean, a recession still hasn't quote unquote been announced, but those people who invested during the dip in March have been able to make significant gains, I mean, from their bottoms. Are there any other companies that you think are, or industries that are yet to rebound and you think provide good purchasing opportunities right now?
In terms of entire industries, I'm not entirely sure. There's a couple of businesses that have definitely kind of like, well, you know, haven't quite come back to where they would have been. You mentioned Square earlier, I think is an excellent stock that got really trounced and was on a real momentum train before the crash. Now it's come back quite a lot, but it still doesn't seem to have as much support as it did beforehand. There's a very interesting business that we've invested in through the company called StoneCo, which is essentially the Square of Brazil. And that's a business that's been, and Warren Buffett is a large shareholder in it. That company was very badly hit. I think and even though it's back up about 100% since the lows, it's still way off its recent highs. A company which maybe people wouldn't be as aware of is a company called Eventbrite, which were a company that was already in a bit of trouble. They'd made an acquisition a few years ago that was taking a bit of time to sort itself out. And Eventbrite are one of the big ticketing companies in the world. So they ticket for events, and obviously with all these events cancelled, their stock got hit very badly. I think it was down at 80% at one stage. So that's a business that I would look at as being severely punished and not yet had its time to recover fully from the crash.
Okay, yeah, that's very, very interesting. Okay, so we're going to do something we like to do internally, and it's a game called Pick One, essentially. So you have to pick one stock to own for whatever period of time.
Yeah, just your voice is gone again.
Oh Lord, is my internet acting up again?
Oh, there we go. We're back.
Okay, lovely. Thank you. Thanks for letting me know. I was saying that we're going to play a game that we play internally, and it's essentially asking you to pick one stock to hold for whatever duration of time I say. And I understand this goes against our investing thesis, but it's just, you know, we're all long-term investors aiming to invest for long periods of time. But, you know, it's just a fun thing. So if you could pick a good stock to own for one day.
Stock to own for a day. Okay, I mean, I typically think of investing in stocks for 10 years. So, I mean, to own a stock for a day, SpaceX, or sorry, Virgin Galactic, just in case they take off, I suppose.
Okay. For the next week.
Oh God, this is just going to keep going in short-term increments. In the next week, well, Slack is reporting this evening, so I'll be very interested to see how that goes. So I suppose I'll go with Slack.
Okay, for the next year.
For the next year, I think, for the next year, do you know what? There's a company called Peloton, which I'm very excited about. They are up, I mean, they're already up about 100% since we recommended them just a few months ago, but I think they could have an incredible year. This is, you know, sometimes stocks, an awful lot of time you see an investment and you worry that they're not doing well because everything's going right for them. Well, this is a company where everything is going right for them and the stock is performing incredibly. Like, this is the best time that you could possibly own a business that sold connected fitness devices to the home. So the stock's doing really well. I think it's going to have a really good year going forward.
Okay. The next month. Sorry.
The next month. What's coming up in a month? Roku is a company that I find it quite interesting. That's an over-the-top streaming company. I don't know why I'd want to own it for a month. I mean, I'd like to own it for 10 years, but you know, if I have to pick a month, yeah.
And then one for the next decade.
Shopify. I was going to say Amazon because that's the safe bet, but Shopify is. I mean, Shopify is a company that we recommended when I think they were at $42, and I think they're close to $800 at the moment. But I still love it. It's my biggest holding, and I think they're a great company, and I think they are one of the few companies that could possibly challenge Amazon.
Very, very, very exciting. Okay, so thank you so much, Rory, for your time. We have about 15-ish minutes left, and I wanted to allow, you know, the people here ask you a couple of questions. So I'm going to quickly, if you have it, I've noticed people have already been putting questions in the chat. So we will, so I'm going to just start running through the Q&A actually. Someone wants to know that, should they be at ease or concerned with the markets going up despite the riots?
That's a good question. I mean, again, like my job is not as someone who watches markets all day. My job is as an analyst for individual businesses. So, you know, my opinion, I would disclaim that my opinion is probably not worth much, but it is unusual to see, especially in America with the current economic climate. They have 40 million people unemployed. There's still, the coronavirus is still tearing through that country at a rapid pace. They're still having over 1,000 deaths a day. In Ireland, where I live, we had one death yesterday, and the country is still on complete lockdown because we don't want a second wave. America seems to be playing very fast and loose with this virus, which is worrying. And of course, there's riots, not riots, there's peaceful protests, and there has been some looting and unrest, but what you have is a country that is waking up from what has been a century-old problem, and it's making a lot of people very upset, rightly so. And you know, there is going to be some disturbance to the economy. Wall Street doesn't seem to care. I think they probably should. So yeah, I'd be slightly concerned, but you know, like I said, the stock market usually doesn't really care what's happening in the real world. The stock market lives in its own world, and businesses will still make money. So the system is set up like that.
Yeah, I think we've all seen that very, very clearly right now with the rises, considering, you know, just considering all that's happening with unemployment, etc. So to move on to our next question, how do you feel about the oil and gas industry?
I think there's some great businesses within the industry, but it's not one I would ever invest in. I think that it is a depreciating industry. I believe that the world is going green and it will continue to go green. I think a lot of people misunderstand or probably underestimate the impact that the move to electric vehicles is going to have on oil prices. Of course, electric vehicles won't solve all the problems. There's oil will be needed for a vast amount of other industries. But just look what happened to oil futures when America was shut down for less than a month. They completely collapsed because so much of their profit is out of putting it into vehicles. So I do think it's a bad industry to be invested in general. I think there's still, very well-run companies in it. I think what we're going to see over the next year or so is an awful lot of bankruptcies in the smaller, less well-managed businesses. I probably should have mentioned oil and gas in when you asked me about the companies that were being, or the industries that were being irreversibly damaged. There is hundreds of smaller oil and gas companies in the United States who cannot survive when oil is under $40 a barrel or under $30 a barrel. And even though it's recovered since the lows, I still think it could go lower again, especially if there's another outbreak.
Yeah, I 100% agree. But I think on that note, personally, I like to look at, the big, like you mentioned, the big companies. So like Shell, big companies like Shell that are almost moving to become integrated energy companies and, trying to increase their holdings in renewable type assets. So that might be interesting to look at. And you mentioned electric vehicles. So I'm going to ask the question, is my internet, apparently my internet is unstable.
Seems okay.
Okay, perfect. Yeah, I'm going to ask the question everyone has been asking. I've seen it like 10 times and we get the question almost every day. How do you feel about Tesla? And a follow-up question, so that is, how do you generally feel about investing in companies with a volatile CEO? Because I feel like, that's the perfect word, volatile CEO.
Yeah, Tesla's not a company I follow particularly well. Our CEO and founder, Emmett, is the Tesla bull in the office, and he would be much better able to answer this question. It's not a company I invest in even. What I will say about Tesla is I think they have an incredible brand. Elon Musk has an incredible vision, and he, despite his eccentricities, he is someone who has created incredible shareholder value, created hundreds of thousands of jobs, totally reinvented an entire industry. But yeah, I don't like his public persona and how he behaves, and I wouldn't invest in the company because of that.
Okay. Interesting point of view. And how do you think about investing in healthcare right now with all that is going on? So that industry. So healthcare, biopharmaceuticals, all of that should just come together.
So I typically would put energy companies, pharmaceutical companies, and major banks in a category of stocks that no one should be investing in unless they have some form of expertise in that industry. The pharmaceutical industry is incredibly complicated and incredibly specialized. If you don't know about how drugs are formed, if you have no background in chemistry or biopharmacy, and even then, if you do have a background in that, you are still so far behind the Wall Street investors who have hundreds of specialized pharmaceutical investors looking out at every single company, at every single pipeline. And you will not beat them at that game. They are too good. So if you don't know how the FTC goes about bringing a drug from development to market, if you don't know that it takes 10 years and about $350 million to get a drug onto the shelves, and that 1 in 5,000 actually get there, you have no business being invested in pharmaceuticals because you will probably lose all your money.
Yeah, I don't disagree. I don't invest in pharmaceuticals at all, ever, for any reason at all. And so bringing up how I feel about pharmaceuticals, that's basically gambling. And if you feel like throwing a hunch, especially right now, it could be good. How do you feel generally about sport betting type companies? So we see DraftKings is having a great run right now post their IPO, and we see other the casino type companies are also starting to go up as there's more positivity about the industry. So how do you feel about, should we say DraftKings first? Because it's probably the only major bet, and then how do you feel about the other ones? I don't know if you started looking at them yet as well, because I know you guys like to give a bit of time.
Yeah, we don't. So we never had a stock until it's had 2 quarters as a public company, and DraftKings did a reverse merger, so that complicates things even a bit more.
Yeah.
What I will say about DraftKings is their entire product is basically a tax on aggressive masculinity. So it's a very good business to be in. It's basically angry young men throwing money at athletes and hoping that they'll make money out of it. So they're in a great business. There's plenty of money in it, and we'll keep looking at it as a company when they get closer to their second report, and possibly add it.
Okay.
The other companies are, when you talk about like major casino companies, we have one in the app called Wynn Resorts. The reason we picked Wynn was because we felt that they had a very differentiated product, and particularly with their locations in Macau. Now that's all very much been thrown up in the air with not just the coronavirus, but with now the fight going on between Donald Trump and his Chinese counterparts. So it's a tough industry to call. I wouldn't particularly be too excited about investing in kind of the Las Vegas style casinos. There's a British company that I'm not sure, I don't think you guys can invest in, called Flutter Entertainment. They own FanDuel, which is DraftKings' biggest rival. They're not available to our investors, so we don't.
You say Flitter?
Yeah, Flutter Entertainment. They own Paddy Power.
Oh, okay.
And Betfair and FanDuel. So if you're an investor with access to the London Stock Exchange, that's an interesting company that you could perhaps look at.
Okay. And how do you feel about investing in ETFs?
I think ETFs are a really great way to diversify your holdings, particularly if you want sort of instant diversification. It's usually the first thing I tell people to do when they want to get started investing. I typically recommend their very first investment be an S&P 500 ETF, because it gets you through the drudgery of setting up your account and funding your account, and it actually makes you take an action, and then you can take a couple of months to start researching businesses that you want to invest in individually. Warren Buffett has said to his wife that she should invest in the S&P 500 ETF. There's so many people out there who do not want to be bothered investing in individual companies. They just don't care, and that is a perfectly reasonable decision to make. Like, most people don't care about reading 10Ks or annual reports in their spare time. That doesn't mean you shouldn't invest. That means you should figure out an easy way to invest, and probably the easiest way to invest is to invest in the S&P 500 through an ETF.
Yeah, that is actually very, very, very clever. It's also what I think as well. It's like my general advice. I think if anyone has heard me on the webinar, I say it all the time. Buy the S&P 500, earn some returns while you do your research. So with the whole coronavirus, we heard a lot of hoopla about 5G. And I think for a lot of people, it was the first time we had started on doing our research into what is going on with 5G, what is going on with telecoms. So how do you feel about that industry in general? How do you feel about telecoms in general?
Telecoms in general, like, you mean the actual companies like Comcast and Verizon and stuff?
No. Yes, I'm thinking with relation to, Pfizer, Ericsson, those kind of things.
Yeah, again, you've got the wrong person from the company talking here. Emmett actually used to work in Vodafone, was the chief engineer of Vodafone for 15 years. He'd be far better able to answer that kind of question. He was the one who added Ericsson to our app. I think they could be a big beneficiary of Huawei having trouble, but again, it's really not an area that I'm expert in. So I think I wouldn't take advice off myself in this area.
Yeah.
There is one company that I think is very good, which is called American Tower, which is a REIT which rents out space to telecoms companies. They own the leases on all the towers, and that's a very low risk business to be in, where you are benefiting from the growth in telecoms without being exposed to any one company.
Yeah, and on that note, because someone asked the question that feeds in really well, thinking about, leases, what kind of real estate stocks would you be looking? I mean, do you even look at real estate? And I mean, when you think of real estate, I also think of data center REITs, those kinds of things. Do you look at those, and how do you feel about those?
It's not something that we spend a huge amount of time on. I know we have a couple. We have a REIT ETF. I think it's the Vanguard REIT ETF within the app. What I would say is that the a second order effect of the coronavirus is going to be a serious impact on all real estate. If you think about the move to work from home, which many companies have now basically, a lot of the bigger tech companies have basically said you can work from home forever. Lots of kind of old school businesses like banks and consultancy companies never really had gotten around to the working from home thing. Coronavirus has now forced them to get into it. And I think a lot of businesses are going to either stick with it full time or stick with it part time. It's going to have a devastating effect on real estate, particularly in major employment hubs, Manhattan, London, Dublin. Prices are going to plummet. And I would be very worried about holding any sort of high value real estate at the moment.
Yeah, I mean, I definitely see that. So I have 3 more questions. The first one is industries, because people have been asking, how do you feel about the cannabis industry right now? Is that something you look at?
Yeah, we have we have a company that is involved in cannabis called Constellation Brands, which is primarily a beer and wine company. They own a stake in Canopy Growth Corporation. So that's the exposure that we've taken towards the cannabis industry. I think in general, we both believe cannabis is going to be a profitable industry in the future. I don't believe that it's going to be as big as people think it's going to be. I don't believe it's going to be as big as the wine industry, as one Wall Street analyst said. Anyone who's ever been to Amsterdam, where cannabis is pretty much legal, can see that people like to go out and have a glass of wine. They don't all go out and get stoned every night. So I think it will be a big industry, but I think a lot of the ways to play it right now are very risky. The companies are not particularly well run. A lot of the penny stocks are essentially complete frauds, and they face an uphill battle in terms of things like they can't even get banking licenses in the US. No bank will even take their money because they're engaged in a federal crime. So there's an awful lot of obstacles at the moment. I think it will be fully legalized at some point in the United States. I think a lot of countries in Europe will follow suit. But yeah, I think it's probably too early to be picking individual companies. I think the closest we could come was to invest in something like Constellation, which has a stake in the game, but isn't totally dependent on it.
Yeah, and I think you mentioned earlier that you don't really add stocks to your, to the list until they've been trading for 2 quarters. Is that something you would say other, long-term investors should consider doing? Yeah,
I definitely think you should. You decide yourself what the time limit is, but just remember, particularly around an IPO. An IPO is essentially a sales event. It's there to pump up the company and to make it look pretty and attractive to people. And there's billions of dollars on the line for the original shareholders and for the investment banks that are behind it. So there is a huge amount of misinformation. There's a huge amount of hype. It's a real proper boiler room sales event. So if you get caught up in it, you can end up losing an awful lot of money. You also need to understand that when someone IPOs, especially now when there's so much private money going around Silicon Valley, that company don't need to IPO. They've decided now is the time to IPO. And you have to ask yourself, why have they decided now? And an awful lot of the times what you'll find is within a couple of months of them IPOing, suddenly they start coming out with, oh, our business model isn't working as well as we thought it was. They're dumping their shares on the public, and like this is exactly what Uber did to people. It's exactly what WeWork tried to do to public shareholders. So you need to be very careful about investing in IPOs. Know that you are buying off someone who wants to sell. And if you just wait, give it a couple of quarters, wait till the market kind of figures out what they think is a fair price for the business. And you might miss out on a couple of percentage here and there, but in the long term, over 10 years, it's probably not going to matter that
much. Yeah. Okay. And the final question is one, someone asked in general is that if you're investing for long-term, big, long periods of time, that means you're essentially not trying to sell, you're deciding your gains should be long-term. So should we be focusing a lot on dividend-paying stocks so you're making income in the interim?
Dividend-paying stocks. It depends what age you're at. It depends what you want out of your investment. If you're a younger investor, I would recommend you probably stay away from dividend-paying stocks. When a company decides they're going to pay a dividend, what essentially they've done is said, we've run out of ideas. We don't know what we're going to spend all this money on, so we're just going to give it back to you. That means that they're not going, that there's exceptions to that rule, and some companies pay a dividend just to kind of keep bigger shareholders happy. But in general, they've kind of decided we're going to stop innovating. We're happy enough to make the money we're going to make and keep paying people out. So if you're getting closer to retirement, or if you're looking to live off your investments, then dividend investing is great. But if you're younger and you're trying to grow your capital, I would invest in more fast-moving, nimble tech businesses that reinvest the money into the companies and try and grow the business over the long term. I mean, most people, an awful lot of new investors come to me and think that they're going to be able to invest in a couple of companies and live off the dividend. But like the best dividend you're going to get from a reasonable company is about 4%. So if you have to be investing millions to live off 4% a year, and it gets taxed. So,
Yeah, that is also very, very true. Yeah, that's the hour. That's all the time we have today. Thank you to everyone who joined, all 100 of you. It's been on our admin back end. It's full. We had capacity for 100 people. We wanted 100 people, and a lot of people have been trying to get in. I've been getting, if you saw my eyes darting, I've been getting emails on the side saying trying to get in. So thank you to the people who joined, and thank you so much, Rory. You've given us a lot to think about. You've given us, a lot of information that hopefully we will go back to invest in. I guess the key things that you guys should take away is Rory's portfolio can be found on MyWallSt. And, Rory's portfolio can be found on MyWallSt. If you're interested, you can sign up. They also have an app. And from tomorrow, they've allowed us, so every year they bring out a toolkit right at the start of the year to get you invested for the rest of the year. And they've kindly allowed us re-release it to our users. So you should be able to get access to it from tomorrow. And it costs, it's obviously we have to pay for it because it's their content, but it's really, really good. It helps you figure out how to start building a portfolio, how to start investing. They recommend a couple of companies, quite a number of companies, and actually give you investment thesis on why you should be investing. So it's super interesting, and hopefully you guys come for our next Under the Bamboo Tree event. Maybe Rory will come back for another one. So yeah.
I'd love to. This is great. Thank you guys for having me, and thanks for everyone who tuned in. I hope you had a good time.
Yes, and we'll send you a roundup email with all his recommendations as well. Bye, guys.
Check.